Raul, let's talk about the fourth quarter of this past year of 2025 because it really marked a definitive shift for Miami real estate. For the last 24 months, let's say 2 years, we have been in a correction. Transaction volumes were down, sellers were, let's say, stubborn, and buyers were paralyzed. But that area, it's ending, Raul. We are now entering what we call the Great Reset. What do you see on the data, Raul?
That sentence sounds familiar because we're talking about the great reset, not just in the real estate market. We are listening that sentence in the money market as well. So the data from Q4 is clear. The market is transitioning from a post-pandemic correction into a period of stabilization.
Yeah.
But Andres, it's not just a simple story. Andres, Miami has bifurcated. We now have two distinct markets operating in the same city. What can you tell me about that, Andres?
Well, Raul, if we talk about that, we have to understand that today we're going to break down exactly what's happening in the single family sector versus the condo market. Two separate stories and why your strategy must change this year, 2026. Because let's start with the macro driver, the thaw in interest rates.
Mm-hmm.
Because throughout 2024 and early 2025, the market was frozen, Raul, and rates were hovering near 7%.
Mm-hmm. Yes, Andres, you're right, and that killed discretionary movement. But in the final month of 2025, we saw rates dip a little bit, but dip.
Yeah.
We touched the low 60s, and this seems like a small change, but the psychological impact was massive.
Yeah.
Andres, it unlocked pent-up demand.
Mm-hmm.
Buyers who were sitting on the fence watching the game suddenly re-enter the game.
Yeah, definitely, Raul. And this brings us to the single family home market, right?
Yeah, that's right. You're right. While the national media talks about the housing recession, Miami single-family homes are showing incredible resilience. We closed the year with 4 consecutive months on sales increases, Andres.
Yeah, the resilience is something that we have to talk about. And let's go back to just December alone because sales rose nearly 6%, Raul. Think about that. After 2 years of decline, volume is coming back. Prices have stabilized. The median price is sitting around $660,000. And that is a slight dip of just over 2%. That is not a crash, Raul. It's not a crash.
Yeah, for me or for us in Miami Real Group, this is a healthy normalization of the market. The frenzy of 2021 is gone. No more for the moment. You never know when it's coming again, but not for the moment. But the demand is real. Inventory has risen to about 6 months of supply, and this is technically address a balanced market.
Yep.
Buyers have more choices. You have time to inspect. You have time to negotiate, but do not expect fire sales prices on good homes.
Yeah. Sellers are really, let's say that sellers are still getting almost 95% of their asking price. However, Raul, the story changes completely when we look at condos. This is where the pain is in, right? I mean, and this is where complexity lies. The condo market is grappling with, unfortunately, Or fortunately, we never know. It really depends how you see it.
Mhm.
With a regulatory shock, the
Mhm.
post Surfside reforms are now fully implemented.
Yeah. And then there's the milestone inspections, fully funded reserves. This has changed the math of owning a condo in Florida. We are seeing a massive split between new buildings and legacy buildings.
Mm.
If you own a building that is 30 years or older, you're facing headwinds. Inventory in this segment has ballooned, but we are looking at over 13 months of supply in the condo sector.
Yeah.
This is firmly, Andres, a buyer's market.
Yeah. But why is inventory rising, Raul?
Andres, because fixed income owners cannot afford the new reality. Insurance premiums have doubled.
Mhm.
HOA Andres fees are skyrocketing to catch up on reserves.
Yep.
So they are listing their units, but there is a twist. These older units are actually selling faster than the newer luxury units. And why, Andres?
Oh, Raul. Well, I guess because price, right? We are seeing a medium price gap that is impossible to ignore. A newer two-bedroom unit might cost over $1 million easily. A comparable older unit trades for 500,000, 400,000, $600,000, and savvy investors are stepping in. They are buying these older units at a deep discount, and they are doing the math. They accept the high HOA because the entry price is very low, but it could be for some people a dangerous game.
Mhm. Exactly. If you don't know the numbers, Andres, it might be a big problem.
Yep.
But for those savvy investor or any investor who wants to step into this market, you must analyze the reserves. You must see the engineering reports. Buying blind in this market is a financial suicide.
Yeah.
Now, Andres, let's look at the submarkets because Miami is not monolithic. Take Brickell, for example, the financial core. What do you have to tell me, Andres, about Brickell?
Well, Raul, inventory there is very high. Nearly, just think about these numbers, Raul. 2 years of supply. It
Mhm.
is a buyer's paradise. It is like going to a playground, like going to a mall and buy tons of units. Right now, it is a buyer's market, but sales volume is rising. People still want the lifestyle, but rents are, let's say, softening, they're stabilizing. New buildings very close to Brickell in Edgewater and downtown. Let's say that they have delivered thousands and thousands of new units, and property owners or landlords are offering what we call concessions,
Mhm.
free rent month. Let's say rent today and don't pay for 1 to 2 months. They reduce deposits. If you are an investor looking for immediate yield, the luxury rental market is, as of today, it is tough. Competition is extremely aggressive. It is fierce. And contrast with Coral Gables, Raul, what do you see in Coral Gables?
And Andres, Coral Gables, what a dream area. The Gables remains a fortress. It
Yeah,
is stable as always. This is an island. This is a bubble space protected for the winds of the markets of the real estate roller coaster, and it is very stable. And the seller's leaning market, and
yeah,
it's a seller leaning market. Why? Because you cannot build there. The zoning of the areas is strict.
very strict.
And the supply is constrained, Andres. Price have barely moved. It is the safe harbor in the area for
Yeah,
families seeking stability, when we have the beach. Miami Beach is the most bifurcated. South of Fifth, is its own world.
Yeah.
Prices there actually rose. Ultra high net worth buyers, that they do not care about the interest rate. They care about exclusivity, but move a few blocks north to the older buildings, and you see the distress.
Yeah. Yeah, you can definitely see the impact of the insurance crisis.
Mhm.
So, what does this mean for you in, let's say, or for everybody watching this video in during this 2026, Raul? What do you say?
We believe that the Great Reset will continue. We expect rates to drift down into the fives, the higher fives. By the end of the year, this will fuel more volume, more people that can afford a house because of the drop of the interest rate.
Right.
The locking effect will end. People who held onto their 3% rates will definitely finally move. Sorry, finally move, because life does not wait for the Federal Reserve. People get married, people have children, people retire, and for buyers, Andres, this is a strategic window. In the condo market, you have a leverage that we have not seen in years, Andres.
Well, Raul, I mean, you can definitely negotiate aggressively. You can demand repairs in in the single family market. You definitely have a stability. You're not competing with 20 or 30 offers
No more.
anymore. And for seller, Raul, the days of, let's say, aspirational pricing, those days are over. If your home is turnkey, it will sell. If it is a project, the market could punish you. Buyers today want, let's say, done completely. I want to move in today, not tomorrow or not in 20 years. They do not want to deal with contractors or permits. Uh, Ultimately, Miami remains let's say an outlier because wealth migration is real, Raul. New
Mhm.
residents are arriving daily, on the hour, from high tax states, bringing high incomes to Miami. People from New York. I mean, what's happening in New York? It's crazy, and we're not going back to 2008. We're moving forward into a more mature, more regulated, a more complex market. So, do you need a guide, Raul, in order to move to Miami?
Of course, definitely you need it. How wealthy people are coming, who is leaving the state? I think wealthy people are coming to the state from the state that you mentioned before. And unfortunately for people who is struggling with the price of the living cost in Miami, or move to northern areas where the houses are affordable.
Yeah.
So definitely you need a guide. You need to understand the nuances of each building and each neighborhood too, and do not rely on national headlines. Real estate is hyper local. If you're ready to navigate this new landscape, we are here to help you. Let's review your real estate options.